Hey, in today's video, we're going to be talking about what it's like to own your new business, your LLC, for the first year. Because what I want to do is make you aware of any potential dates that you may not be aware of, but also the little pitfalls that a lot of new business owners fall into, which honestly, some of these I fell into as well. So I want you to learn from my mistakes and be able to bypass those mistakes so you have a great first year in business. So we have a presentation here that I've created on the iPad. It took me a while, but it's going to help organize our thoughts here. Because if you're anything like me, on day one after LLC setup, it feels like you have the world in the palm of your hands, right? You're like, I'm going to conquer the world. I got this new business. You're all excited. You want to just get going, start getting income coming through the doors, build your business, and it's really exciting because you have this vision in your head. But then around day 12, maybe you get set up with a CPA and they start telling you things about quarterly estimated taxes, 1099 and W-2 filings, pass-through taxation, self-employment taxes, UI payments, LLC renewals, and they start throwing all this information at you. And if you're wired like me, you might just kind of go, yep, that makes sense. I got it, right? Sounds good. But in reality, on that day, I'm really putting my noise canceling headphones in and I'm just going, what the what? Like, what is this person saying? But a lot of people, what we tend to do is when we get overwhelmed with information, we kind of shut down a little bit. Psychologists might call it overwhelm freeze, but basically you have these what's called notable offenses in business, right? And this is important to understand because even if you're not doing this and you hire employees someday, they might be doing this. You give them information, they start to get overwhelmed and they just go, yep, got it. But really what they're doing is this. They have no idea what you just said. So it's good to over communicate. And what I have found with CPAs, accountants, these are number crunching people. They throw around numbers like nothing. They're like, oh, a 1040-ES, you got to file that, blah, 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 blah. And you as a new business owner are like, I don't know what this person's saying. So what I don't want you to do is end up on day 366 and you're sitting there looking at UI fines, late tax penalties, LLCs being dissolved, all those things. So that's what this video is designed to do for you. So as a new LLC owner, I want you to do this instead. I want you to understand thoroughly what pass-through taxation means for your business. So if you hear it called flow-through taxation, same exact thing, just a different way of saying it. But it's really important that I want you to stick with me because this is going to be the heaviest content of this video right now. So get buckled up, but we're going to try to break it down and make things easy to understand. So a typical employee pay stub, right? Because that's something that we're familiar with if you went from being an employee to a business owner. It says split withholdings for a W-2 EE. Now, I highlighted in red or underlined the EE. That stands for employee. So if you're ever reading stuff online in the future and you see EE, that's employee. ER is employer, all right? So your typical employee, a W-2, they're having their taxes is actually split between them and the business. So this particular case, this example is for an employee that's making $150,000 a year. Their weekly gross, $2,884.62. So then what we'll start with is on the employee side. You have your income taxes. We're familiar with these, right? You have your federal income tax and then your state withholding, which is the state tax. In this particular case, this example is in New York State. You know, these numbers would look different if you're in a different state, but those are the things I think that most of us get. Then where you get a little fuzzy is on the blue underlined items. These are your unemployment and disability insurances. You'll notice more of these are floating over to the employer side, right? You have FUTA, which stands for Federal Unemployment Tax Act. And then in this case, New York State Unemployment Insurance. So earlier I was talking about UI fines. UI, if you see that, that is unemployment insurance. And then you're going to have to get set up within your state for that. So what I'd recommend is if you do have employees, right, and you're going to be paying them a salary, what you want to look at is go into your state and search, you know, if you're in Texas, just put Texas unemployment insurance employer info. And then what you need to do is register with the state and figure out what that unemployment insurance is going to be. In this case, you see New York reemployment. All right. So reemployment, that actually happened because of the pandemic. Their cash flow for unemployment insurance, they went to zero because everybody was unemployed for a little bit. So there's an extra tax there. And then on the employee side, you have New York State disability insurance. A lot of states, you have your disability insurance as well. Now, the one that I really want to highlight here is in green, and that's your FICA taxes. That is Social Security and Medicare. And you can see that I've circled the numbers there because when you're an employee, your employer is paying half of those, and then you're paying the other half. It is different when you're self-employed, which we'll talk about right now. When you're self-employed, it is a 15.3% self-employment tax because you're going to be paying both sides of the house on those FICA taxes. Again, that's Social Security and Medicare. So that's something I want you to be aware of. Is it's different when you're the employer and you're just an LLC and it's just you as a single member LLC. Let's say you don't have employees yet. You're still going to be paying a 15.3% self-employment tax, which is both sides of that FICA. All right, so let's get a little bit simpler with this so then we can kind of explain a little bit more as we go. Your first year LLC, let's say hypothetically that you grossed $60,000, which isn't a bad first year, right? Like, do understand as you're getting set up with your business, your first year is probably going to be your least profitable, but just stick with it because what you want to do is get a hockey stick curve. If you ever hear somebody talk about that, the hockey stick, it's kind of shaped like that, right? And a lot of times in business, this might be year 1, 2, 3, and then all of a sudden year 4 it takes off. And sometimes people quit too early on their dreams, and you got to get to that edge of the hockey stick. That's like probably the worst looking hockey stick you've ever seen. You can tell my drawings are not good. So first year expenses, $35,000. You net $25,000. All right. So in your first year, if you net over $1,000, what you need to start doing is paying quarterly estimated taxes. All right. We're going to be talking about that. Quarterly estimated taxes are different because, again, going back to this example of what you're used to as an employee, this is not how your taxes are paid anymore. You're not getting your taxes paid every single time you're getting a paycheck, right? So if you make $1,000 as an employee, you're not getting $1,000 in your paycheck. You're already getting those taxes pulled out. But as a business owner, you're getting that $1,000. You're like, well, when did the taxes come into play? So as an LLC, you're a pass-through taxation entity. So what does that mean? Well, that means on that business, when you net $25,000, it flows through to your personal income tax return, which we're used to paying like April 15th, April 18th, around there is when that's due. So this is a little bit different, right? Because typically as an employee, you're always like, oh, I have this money coming in, but it's already being taxed. So at the end of the year, you might kind of like find out like, oh, you owe $1,000 or you're actually going to get $1,000 tax return. This is different because that net $25,000 is flowing through on your personal tax return. And there isn't some separate tax that's happening on your LLC. It's all happening on your personal income tax return. So the IRS knows if we get money, we spend it, right? So what they ask us to do is to pay quarterly estimated taxes. Now, in this particular example, you can see that I put that this is 2023. These dates are all going to be roughly the same each year, depending on the year that we're in. But what you have is essentially quarter 1, and then quarter 2, quarter 3, and quarter 4. So if you think of the calendar year, those are quarter 1 would be January, February, March. Quarter 2 was going to be April, May, June, etc. And then the dates that you can see down here are typically a couple weeks after those quarters are up. So quarter 1, January, February, March, is due April 18th. Quarter 2 is due June 15th, September 15th, and then January 15th. And you see underneath this that you're going to have to pay federal and state estimated taxes by those dates. All right. So if we go down a little bit further, you can see that the federal form. So if your CPA tells you got to file a 1040 ES and you're like, I don't know what that is. What that is, and I'll just put a little mention right here, 1040-ES. So each quarter, you're going to file a 1040-ES payment to the federal government. All right. The state form is going to be different, right? There's 50 different states, but you just go to Google and Google your state estimated tax form. Just make sure it's a .gov website. It always pops up number 1. All right. But you're going to have to file and pay these taxes. Now, one of the things I want to talk about too is the fact that the government says pay as you go so you don't owe. So you still pay personal income taxes on 415, but it should be minimal. Now, the reason for that is, remember, this $25,000 is flowing through onto our personal income tax return. So on 415, if you're paying this correctly and you're paying estimated quarterly taxes each quarter, what happens is then on 415, you should be pretty darn close to what your tax bill should have been for last year. So that's why this is nice, is because when you're an employee, right, those taxes are coming out every week or every 2 weeks. It stinks that you're seeing it coming out. But when you're the employer of a new LLC, you have to budget and be able to pay these quarterly estimated taxes so you're not getting hit with a large tax bill on the 15th. So One thing I want to talk about is the number 15, like that day of the calendar. Taxes, whether it be personal, quarterly, or tax extension dates, they will fall on different months but are due by the 15th. So why don't we go back up here and explain this a little bit more. You'll notice that most of these quarterly estimated dates are on the 15th, but the one in April is on the 18th. The reason for that is each year, obviously, the calendar is a little bit different. If the 15th lands on a Saturday, it gets pushed to a Monday of when it's due. So in that particular case, it would be the 17th. This one got pushed to Tuesday because there was a holiday on that Sunday. I think it's the Emancipation Day. So when you see it pushed a little bit beyond the 15th, that's wise. It probably landed on a weekend and then it got pushed to the Monday. And if there's a holiday, it could even push it to a Tuesday. But do know that the 15th is typically when these tax dates are due. Now, I did mention tax extension dates. Kind of depends on your CPA. Some CPAs like to have it set up so that you're paying by the date that your taxes are due. Others will always file the tax extension date, which is going to depend if you have an LLC, S Corp, or whatever it is. So I already covered this as far as the 15th falls on a Saturday, it pushes it through. So we talked about that. One of the things I want to talk about too in the video right now is I have struggled with remembering all these dates, right? And they change each year slightly. And like, it's just hard to keep all these things in check. And I call them orbiters. They're like little things that are just kind of orbiting your head. And you're like, oh, when are quarterly estimated taxes due? And I remember earlier in the video, we're talking about W-2s and W-9 filings. And oh my goodness, like, how am I going to remember all this stuff? What I've created is a one-page document for you that has all these important dates for you. And if you text the current year that you're interested in, so right now as I'm making this video, it's 2023. In the future, if you're watching this in 2025, just text 2025, whatever the year is that you're interested in, text it to 888-532-1317. What this will do is you'll get this image on your phone. When you get that image, save it and then mark it as a favorite on your phone so that you can go into your favorites and find this image easily. And then also what you're going to get is automated text reminders of these important dates. So 1 month before your quarterly estimated taxes are due, you will get a text saying, hey, just a reminder, these are due. Then 1 week before that, you'll get a reminder as well. So I call this channel BizBuddy because what I want to be able to do is be your BizBuddy so that these little orbiters, as I call them, that are just circling your head, you don't have to keep all these in your head all the time. So you have this cool service that's helping you through your first year of business and beyond get set up so you don't make the same mistakes I made. All right, so why don't we go down a little bit further here because we have some other important dates that we need to talk about here. We have W-2 filings, 1099 NEC filings, tax planning windows, and retirement contributions. All right, so first one, W-2 filing deadline. This is January 31st. W-2, right? Your employees. So if you end up hiring employees, you have to submit 2 copies of their Form W-2. Submit one to the IRS and submit the other to the employee. Now, you can see I have some red text here. I chose red because that's the brand colors for Gusto. I use a payroll service called Gusto, and they automatically send out federal, state, local W-2 filings and can send paper digital to the employees. I believe if you're sending the paper filings to the employees, it's like $3 an employee. So maybe you don't have any employees right now, but this is good to understand because if you do end up hiring an employee in month 9, then it's like you have to remember that by January 31st of each year, you have to submit these W-2 filings. So if you're using a payroll service, which I highly recommend, all right, and I do have a link for Gusto in the description of this video if you're looking for one. If you use a referral link, you end up getting extra cash bonus for when you get set up, so I highly recommend going that route. Do not try to do payroll yourself. It's a really terrible idea. Have a payroll service that's going to run this for you. So the 1099 filing deadline is also January 31st. If you're not familiar, a 1099 independent contractor. So this is somebody who doesn't classify as an employee, and that's because they're on their own schedule. Yes, they're doing work for you, but you can't dictate their hours like you would an employee. They have a lot more freedom and control over their schedule, and any independent contractor paid more than $600 must be sent a 1099. So a CPA can do this for you. Personally, I have my CPA do this stuff for me because I like to be focusing on the bigger tasks of my business. I don't want to get bogged down in the weeds of doing like filling out 1099 forms and sending those out. It's kind of this, a little bit of a balancing act. And what I would recommend is if you haven't watched my video on the 5 business bank accounts that you need, That one's going to help you with that balancing act, and specifically on how to save for taxes and be able to make sure that you're setting yourself up for success in your first year. And that should pop open on the screen up here in one of the cards. So just be aware, January 31st, 1099 filings. So again, that text service I was talking about, 1 month before, on January probably 3rd, I won't send it out on the 1st because you'll probably be still groggy from New Year's. But it's just going to send a reminder that, hey, your 1099s and W-2 forms are due by the end of the month. I'll include resource links to IRS government site links that'll help walk you through these if you need help with that. So tax planning window. This one's the only one on here that's a little bit ambiguous as a date, right? Because there's not really an official date for this. But what you want to be aware of is in your business that your tax year is most likely the calendar tax year. Sometimes there's a fiscal year, sometimes it's calendar year. A large majority of businesses are calendar year. You probably are as well. On November 1st, that is when you start thinking about tax planning for your year, because you've already had 10 months of income to look at. Hopefully you're set up, you have profit and loss statements you're looking at, you have a good idea of your books. And when you're looking at it, you want to start talking to your accountant, because there might be things you want to consider about spending money on this year to lower your taxable income so that you qualify for different things. A good example is the QBI, Qualified Business Income Deduction. That is a 20% deduction on your business, but it has certain thresholds. So if you made too much money as a business owner, you may not qualify for that deduction. So if you talk to your CPA, they may say, hey, is there anything that you could be spending money on? Like if you can get your income down $5,000, and they're going to give you kind of insights on this as well. But you want to start having these conversations around November 1st. If you start on December 15th, your CPA is going to be overloaded with these questions. There's a good chance that you're going to be scrambling and you may not get these things done in time. So around November 1st, you want to start thinking about tax planning for your business and having a conversation with your CPA about this. You can just email them and say, hey, what should I know? What kind of deductions are out there? Should I be spending extra income? I've done this where I've prepaid for software for the year. I've prepaid for business coaching actually for a year. If you don't have a business coach, that's something down the line that I think is definitely worth it. But what I want to do with this channel is build it in a way that it's free for you and you get good advice. And be sure to like and subscribe on the video, because I want you to be able to catch future content like this as well, because I want to be your business buddy. I want to be your business coach. So December 31st, all right, final day. There's a few things going on here. We talked about tax moves, right? This is the last day that you can, put expenses on the books for your calendar year. It's also the last day to set up a 401k. This is something worth talking about, because if you're a new business owner, maybe at your job, you had a 401k, you had retirement plans set up there. As a business owner now, you can set up what's called a solo 401k. Obviously, talk to a financial advisor, figure out what's right for you as far as getting set up. But you can still set that up till the last day of the year and make contributions as long as you get that set up by December 31st. So another thing worth highlighting here is that December 31st is the last day you can make employee contributions. Remember I said EE is employee. But the day that you file your taxes, if it's, April 18th, you can still make employer contributions up to that date. So again, December 31st, I'm just going to write this in. December 31st, employee. And then I believe, and I'm doing this off the top of my head, it would be 4/18 for the next year. That is the last day for employer. Now, if you're not familiar, and I know I'm giving you a lot of information right now, but I want you to be aware of this information so that when you start having cash coming into your business, that you're like, oh, here's some smart ways that I can save on my taxes because I'm contributing to a 401k plan. The last day for that employer contribution is going to be when your taxes are due. So they give you that grace. And I'm doing this from the top of my head. I will correct myself if I'm wrong, but I believe with a solo 401k as a business that you can contribute up to 25% of the profits. So now, LLC renewal. When you get set up with your LLC, like right now, I'm making this video on 1/20/23. Now, let's say that's the day that I'm actually setting up this LLC. That means that on 1/20/24, the state is going to want you to renew your LLC. Most states are going to have something, they may call it something different depending on the state you're in, but you want to make sure that you're keeping track of that date. And what I'm working on with the BizBuddy text app is, again, the ability for you to say, hey, this is when I set up my LLC. So 1 month before that, let's just call it, 12/20/23, you'll get a text message, and then 1 week before that as well. And I'll give you links and resources to say, hey, this is where you need to be able to go to renew your LLC. Super important, because if you don't renew that LLC, there may be a crack in your LLC. You may lose the protections that the LLC affords your business. So again, for the text app service, if you want those reminders, look in the description below. I'll have that information for you, or you can text the year to the number provided on the screen right now. And then also, I recommended earlier this 5 business bank accounts you need for your business. Definitely watch that video if you haven't watched that yet, because it's going to help you get organized so that you're prepared for those quarterly estimated taxes. I'll catch you in the next video.